You know, my background's in affordable housing. I worked for an agency who did the HUD housing counseling that is required to get a reverse mortgage. So I've been around reverse mortgages for a long time. And I do remember years ago that they somehow did get the reputation that they were not good. And that is like a myth that has persisted for a long time. Were there improvements to the protections made over time? Like, was there a time when maybe they were abused? Like, where's that come from?
Back in the 80s, it was kind of the Wild Wild West, and there was a lot of bad actors in the 80s, and that's really where it all stemmed from. And we didn't have the consumer protections like we have now, like the counseling wasn't a thing back then.
Okay.
The financial assessment wasn't what it is today, right? Where we're going to make sure that you pay the property taxes, pay the current debts, pay the living expense.
There comes a time, somewhere after 50, when you realize home isn't just about where you live. It's about how you live. It's about who you're becoming and what you're ready to make space for. I'm Juli Ford, real estate expert and longtime wellness coach, and someone who's lived in a multi-generational home for the past decade while reinventing my life and my business. And this is Home After 50. A podcast about what it really means to find, shape, and come home to a new season, to a new home, to a new version of yourself. Whether you're thinking about upsizing, downsizing, moving in with family, or just asking bigger questions about what's next, you're in the right place. Each episode, I will share stories, insights, and real strategies for women redefining home and life on their own terms. Because after 50, home isn't just a place, it's a calling. And this time, it's yours. Welcome back to Home After 50. Today, we're diving into a topic that I know a lot of families are curious about and maybe a little bit nervous to explore: reverse mortgages. If the only thing you know about them has come from whispers at the water cooler or the occasional Tom Selleck commercial, I promise this episode is going to open your eyes. Our guest today is someone I trust deeply in this work. Michael Pankow is a certified senior advisor, a certified aging in place specialist, and a respected subject matter expert on reverse mortgages. He serves on the board of directors of the National Aging in Place Council. He's licensed in all 50 states, and he served our country for 12 years in the U.S. Armed Forces, 7 years enlisted, and 5 as a commissioned officer. He's also a father of 4 and wildly passionate about helping older adults protect the dignity, independence, and lifestyle they've worked so hard for. And as you'll hear in this interview, Michael's passion for this work comes from a deeply personal place. In this episode, we break down the myths, the protections, and the unexpected ways reverse mortgages can help support aging in place, multi-generational living, retirement planning, divorce scenarios, and so much more. This might just be the financial tool that gives you and your family more breathing room and more choices in the years ahead. Let's get into it. Hey, Michael. Thanks so much for being here.
Hi, how are you?
I'm great. I'm so glad that you could join us. I'm really excited about this conversation. I know that my audience on the Home After 50 podcast is really going to be interested in our topic today. And there's so many questions I have for you, and you're just such an expert in this area of reverse mortgages. But before we jump into my questions, I would just love if you could just give us like the very high level, maybe oversimplified version of what is a reverse mortgage.
Yeah, it's a great question. And here's how I'll start it. I start my reverse mortgage seminars the same way, which is everybody relax, take a breath. It's just another mortgage, right? It's just another mortgage. But at a high level, a reverse mortgage is an excellent opportunity for borrowers that are 62 and above who own a home, right? Doesn't have to own it free and clear, for them to dip into their equity and to dip into that equity for the opportunity to maybe live a better life, right? Improve cash flow, and still remain on title with all of the consumer protections that we're going to talk about a little bit later. But it's a great opportunity for homeowners 62 and above, dip into the equity of their home, tax-free, right? Tax-free, and to live a better, more fulfilling life.
Nice. And do you find that Is it really a mix of reasons why people get a reverse mortgage? I mean, when I think of a reverse mortgage, I think the first thing that comes to my mind is aging in place. Like people who want to stay in their homes, they don't want to sell their homes and move to like an apartment or a senior living community. They want to stay in their homes, age in place, but money might be getting a little bit tight.
Yeah. Yeah, I would say that's probably the number one reason why is people want to improve their cash flow. But we say that there's really three reasons why, or three categories or buckets. It's need, lifestyle, or plan. And the need is I need to improve cash flow. I need to make home renovations, right? My mom and dad, they have a reverse mortgage and they have a sizable line of credit that the home was owned free and clear. And the way the math worked out, it just really helps them to age in place and make renovations. Sometimes it's lifestyle. I did a loan for a guy in Hawaii, and he just wanted to go on cruises. He wanted to eliminate his mortgage payment and cruise, and he got a line of credit out of it.
Nice.
And then there's a plan, working with financial planners, where you're really being strategic with the use of the reverse mortgage and those assets that you have under management with that financial planner to allow them to have options. So again, it's need, lifestyle, and plan, which really play into it.
That's so interesting. I never really, I've thought about the aging in place and the need. I've thought about the lifestyle. I haven't really thought that much about where it comes into a financial plan. I know you've done a lot of these, so and I'm putting you on the spot here. If you don't have a story, with that kind of a person in mind, that's fine. But can you think of someone you've helped get a reverse mortgage that it was really for a financial plan as opposed to need or lifestyle?
100%. So I like to say now that a reverse mortgage is probably the best refinance option for a senior. And the reason why I say that, we just closed one about 2 months ago where it was first they were saying, no, we don't want the reverse mortgage. And the question was, well, why? And they wanted to pay off their mortgage. And I said, well, what's the balance and how many years do you have left? And he said, well, if we pay an additional $1,600 a month, we've got about 10 years left. And I said, well, what if I could show you a way where you could get a reverse mortgage? You could also pay down that mortgage down to $500, which is the minimum that you have to maintain on your balance, right? As part of the loan's terms and conditions. What if I could show you where you made that same $1,600 a month payment, but at the same time you're building a line of credit? And so when I was able to show that, share that with them, at the end of the day, 10 years from now, they own the home almost free and clear with a $500 balance, which they were okay with. They made the same $1,600 a month payment they were making. However, they got out of that a line of credit that was 250 something thousand dollars, right? In that same period of time. So it's great to pay off your home, but the one thing once you pay off your home is you can't do anything with it unless you go out and get a HELOC or you get a reverse or
Right.
you pull cash out, right? You can't buy a loaf of bread with your home's equity unless you've got access to the equity.
Yeah.
So they loved it because about the time they're 68, they would be 78 when they achieved that, right? They had that 250 something thousand dollar line of credit. Well, you and I both know, being CSAs, that once you get to that 78 range, my mom's 78,
Yeah.
things start to happen.
Exactly.
And having access to that 250,000 plus dollars line of credit where they can never take it away, you never have to make a payment, and you can use it for whatever you want, and it's not counted as income. That's one heck of an insurance policy, rather than just saying, hey, we paid off a house, we got the participation trophy, but now I'm house rich and cash poor, right?
Mm.
So this gives them the option to dip into that.
That's so interesting. So I have a couple questions about that, and I totally agree with you. It's like that 78 age range that for so many
Right.
people, I know, my mom's 82. We've been dealing with
Yep.
a lot of health issues for the last few years, and up until then, she was doing great. So it's
Right. Yep.
unpredictable. It's good, you can take the best
Yep.
care of yourself ever, but at some point, aging does catch up with most of us and needs change,
Yep.
right? So what's the difference then between, so they met their goal. That's exciting, right? They met their goal. They paid off they're going to pay off their mortgage. That's what they wanted to do. But now they have this line of credit that's available to them. And I'm assuming it will be available to them as long as they own the house.
As long as they own the home, right? As long as they're owner-occupied residents. And
Right.
again, what I love about the line of credit with the reverse mortgage is that it's guaranteed by HUD. It continues to grow. Whatever unused portion of the balance, right? So let's say, for example, 10 years from now, they've got to use 25,000 of that 250. Well, now they've got 225. It continues to grow every single year. And that line of credit is not attached to the value of the home. So if the home loses value, that does nothing to the line of credit, unlike a HELOC, right? A HELOC is absolutely attached to the value of the property. And if the value of the property was to dip, like we saw in 2008 and 9, They can freeze the HELOC. They can stop the HELOC. If you miss a payment, you have to qualify for it. It's a totally different animal. I'm not against HELOCs. Matter of fact, there's a HELOC for seniors that I'm going to do a webinar on. But long story short is that that line of credit puts a moat around, just like a castle, puts a moat around the property, the senior, and it's the line of credit is so good. And I like to make this example. I'm in California, right? And we had the Palisade fires. The seniors that had a reverse mortgage during those fires, they lost their home. The line of credit is so strong until the lost payee comes in and pays off that reverse mortgage balance, whatever that balance might be, that line of credit is still intact. So before FEMA can get them funds, before they dip into their assets, if they have a line of credit that's still intact, they can go ahead or access to, they can dip into that line of credit to take care of some emergency needs that happens immediately upon losing your home.
Wow, that's actually amazing to think about. Are there anything, so say you are in an area that, is at risk for hurricane or flood or wildfires. Right. Are there any limitations to your being able to get a reverse mortgage to set that up to begin with, just in case something like that were to happen?
So it's an FHA loan, so they're going to look at the floodplain, right? Yeah. You may have to have, flood insurance, but they're going to look at all that. So it is basically an FHA loan, which requires an FHA appraisal. But no, just based on the seasonality of the weather, cycle, no, that doesn't have any bearing on the actual availability of the product.
You would just probably have to, pay your property taxes, obviously, and also carry the correct homeowner's insurance that was required.
Right. Yeah. Matter of fact. So yes, that's exactly right. So that's one of the requirements of a reverse mortgage. I'm glad you brought that up, is that, after you get a reverse mortgage, most people get it because they want to improve cash flow. They don't want a mortgage payment. They want that line of credit. Right. And not everybody gets a line of credit because it's all based on age, interest rate, and the value of the property. And if you have a mortgage balance. Right. But one of the things you have to do, which you'd have to do whether you own the home free and clear, or if you had a traditional mortgage on it, is you continue to have to pay your property taxes and your HOA and also your insurance on the property.
Okay.
Right? Because if you don't, they can come in and the county, after 2-3 years, they can actually take the property back, whether you own it free and clear or not.
Okay.
Right? And that's quite honestly, you'll probably ask me later about myths versus facts, but I'll jump right in on this one, is that was one of the myths about reverse mortgage. If you get a reverse mortgage, you can lose your house. Well, the classic tale is the news team shows up and asks the senior citizen, hey, why are you losing your house today? She says, well, I've got a reverse mortgage. And, well, you didn't have to make a payment on that, right? So how are you losing your house? Well, it's because the property taxes or the insurance weren't paid, right? Maybe even the HOA if there was an HOA, because HOAs can step in and foreclose on your property too.
Right.
So in the process of underwriting, senior borrowers there's a financial assessment that's done to make sure they can cover their property.
That was going to be my next question. So that must be part of the qualification for the reverse mortgage, is that you have to be able to afford the property taxes, the insurance, and if there's an HOA, the HOA payment as well.
100%. And what's great about that is if we've stumbled in the past as a senior borrower, right? We can, and we've got enough room in the line of credit and all the math makes sense, we can actually do what's called a LESA, a life expectancy set aside. And like my mom has, she didn't stumble, but I said, Mom, let's do this so you don't have to worry about it. We can set it up so that the line of credit, actually there's an allocation from it that covers the taxes and the insurance.
Oh, okay.
For the next 10, 12 years, depending on the age of the senior and depending on the amount, right? So that's a great benefit for a senior who maybe wasn't the bill payer, right? Maybe the other spouse paid the bills. They didn't really know how to pay the property taxes. Right. And so we can set that up. Now, if they've missed the property taxes, the underwriter may say, nope, we're going to mandate that. We're going to have to set up a LESA for you. Okay. But that's another consumer protection. And it's awesome. I'm being a little subdued right now, just, Julie.
I know you get excited about them. Yeah.
The product. I could go on forever about the product.
No, it's great. I'm so glad to have the opportunity to ask you these questions. So I just want to make sure I understand about what's called the LESA, and what does that stand for again?
Life expectancy set aside. So it's LESA, life Perfect. Expectancy set aside.
And so that might be mandated by the reverse mortgage lender if you've said if you've stumbled in the past. So, and what I think what you meant by that is if you've missed some payments on things, if you maybe missed some property taxes. So it could be mandated, or could you also just choose to opt into a LESA so that you don't have to worry about remembering to pay those things?
Yep, just like my mom, I suggested to Mom, hey Mom, you know what? She got a $300,000 line of credit. It's the home I grew up in. They owned it free and clear. It's down San Diego, so high property value. My mom was 76 at the time.
Okay.
And so it was like $300,000 line of credit. So Mom, this won't hurt you at all. Let's go ahead and let's get a LESA set up so you don't have to worry about it. And so
Nice.
we did. So you absolutely can say, yeah, I'd like to have the LESA set up.
Great. I'd like to get back to the HELOC for just a second because I had another question about that. And I can see, the differences and the benefits, maybe why a senior would want to consider reverse over a HELOC. But I did have a question like, so if someone waited and didn't get a reverse, say, and then did need to access the equity in their home and they thought they would want to do that through a HELOC, is a HELOC you must have to have some income qualifications for a HELOC because with a HELOC, you still have to make payments. So even if you got $100,000 HELOC, it's only going to have like maybe a 10, 15, possibly 20-year term. It's going to have an end date, not, it's not going to stay active and, the whole time that you live in the house necessarily. But it also is going to have a monthly payment requirement, which if you accessed a lot of the equity could be significant.
Right. And they're going to qualify you. So, for example, I was having a conversation yesterday with a borrower. There was a $100,000 line of credit associated with the HELOC, and there's that interest only payment on that is about $600 and something dollars. Okay, plus or minus.
Yeah.
But they're going to qualify them on the fully amortized payment, meaning 10 years from now,
yeah,
when that goes to a fully amortized payment, that's what they're going to qualify them on. Okay. Now, there is a HELOC for seniors now that is slightly different. I don't want to get into that too much.
Okay.
But a traditional HELOC, which is based on your FICO score, which the reverse mortgage is not based on your FICO score, based on a true debt to income ratio, which we don't have a debt to income ratio in the financial assessment. It just makes sure you can cover 3 different buckets of expenses.
The things we
but
talked
with the
about.
HELOC, right? Yeah, with the HELOC, if the property value decreases, you miss a payment, your FICO score decreases, they can freeze that HELOC just like that, and now you're without that money. With a reverse mortgage, they can't freeze the line of credit. It's not counted as income. It's not taxed. And if you use it, you never have to make a payment on it until you decide to sell the property, you decide to refinance and get out of the reverse mortgage at a later date in time for whatever reasons. Or God forbid, there's a maturity event and you as the borrowing, the last surviving borrower passes, where you move into a full-time care community, and that's when your heirs would have the opportunity to then make some decisions on how they want to move forward. But
meaning they might sell the home, and then the balance of the reverse mortgage would need to be paid back upon the sale of the home.
Exactly.
But the heirs, or you, if you had just had to relocate, would still get the proceeds of whatever was left. The difference between what the home sells for and what the balance is of the reverse mortgage that you've used.
That's right. So it's, again, just like I said in the beginning, it's just another mortgage. So with heirs, since we're talking about that right now, the heirs have got 4 options. They can either buy the property, they can sell the property, they can refinance onto the property if they're on title, because that's ownership, right? Or let's say mom and dad, remember Tom Selleck. Tom Selleck has been pushing reverse mortgages for a long time now, right? And I love when I get up in front of a group of ladies, I say, hey guys, I know you were thinking about Tom Selleck when you were thinking about reverse mortgages. I left the helicopter and the Ferrari back at the house. You get me, I'm 5'10", he's 6'2", deal with it. And they always laugh about that, right? But yeah, if some of the early adopters, they've been in reverse mortgages for a long time. So the last option that the kids have or the heirs is a deed in lieu of. And that's when maybe mom and dad or dad lived far away. Maybe they're in a different state. Maybe the balance of the reverse mortgage is about the same as the property value. So if they were to sell it, there's really not a benefit there, right? But mom and dad for the last 20 years enjoyed no mortgage payment, total security. They paid their property taxes.
They got to stay at home. Yeah.
They got to stay at home. They lived a more fulfilling life, right? And that's what it's all about, is that age and place opportunity and do what you're doing. But yeah, they have 4 opportunities for the heirs, and that's, again, they can sell it and then pay off the reverse, like you said, right? They can refinance onto it if they're on title. And again, that's paying off the reverse or the value, whichever's lower. When they buy the property, they refinance. They don't, if the property, let's say my mom's house is worth $800,000 now. But so let's say her reverse mortgage balance, God forbid something happens to her, is $300,000. Okay. We have to buy the house for $300,000. If we're not on title, we buy it for $300,000 minus 5%, which is a consumer protection for the heirs. If we're on title, which I'm not on my mom's house for title, I would refinance for the $300,000. So they're not saying, hey, you got to buy it for the $700,000 or the $800,000. It's whatever that balance is or what's lower. So let's go back to 2008. We all went through that, right? and we saw values drop by 50%.
I was upside
Well,
down in my house for about 5 years. Yep.
right, exactly. So one of the things that's talked about with the reverse mortgage is that reverse mortgages can be considered to be expensive. The most expensive aspect of a reverse mortgage is the upfront mortgage insurance premium that's paid on every single reverse mortgage, whether it's a refinance or it's a purchase. And that upfront mortgage insurance premium is 2%. That 2% is based on the value of the property or the purchase price, and the purchase price and value usually hopefully the same if the agent did their job, right?
Sure.
So it's 2%. So in my mom's case, it was 700,000 for easy math. The mortgage insurance was $14,000.
14,000. Okay.
Right. So you think, well, that's a lot of money. Now that she didn't have to come out of pocket for that. That came out of the proceeds. So that $300,000 line of credit that we talked about, that was after everything else was paid for. Okay.
Okay. So that essentially
Uh,
that 14,000 is essentially part of the balance of the reverse mortgage at this point.
right. It becomes part of the closing costs, and
Okay.
it becomes part of the initial loan balance, right, where the interest starts to add up.
Yeah.
But what's really important for your listeners to know, right, and for us to share it with them, is that that upfront mortgage insurance is critical because what it does is it makes the reverse mortgage a non-recourse loan.
This is
Okay.
huge. So I want you to say that again, and I want you to explain to everybody what that means, because this I think is
Yes.
one of the best things about the reverse mortgage product.
Yes. So that 2% upfront mortgage insurance that my mom paid, which was 14,000, what that means to both her and to us as heirs is that if for some reason we have a black swan event and we see property values dip the way they did, and if ever my mom's property or any other senior's property was upside down, meaning the reverse mortgage balance was greater than the value of the property, the heir at the time that they want to sell it or refinance it or get out of it, they're not responsible for the shortfall. So easy math, if the reverse mortgage balance is 400,000, the value of the home is 200,000, that's a $200,000 shortfall. Myself as an heir or my mom or dad, in the event they sell that property, they're not responsible to come out of pocket to make up that difference.
So if the
And
home
that's,
sells for the market value of $200,000 at that point,
yep,
the heir or the homeowner pays the
and walk
reverse
away.
mortgage lender the $200,000 that they got for selling the house, and then that's it. They don't owe any more money, even if the reverse mortgage balance was higher than that.
100%. Yeah, you do not come out of pocket with personal assets to cover the shortfall. So that's why. So everybody that gets a reverse, whether it's a refinance or it's a traditional, it's a purchase, they pay that 2%. And there's talks about looking at that and reducing that, right? Because in some areas of the country, like my mom, it's $14,000. Well, then you've got some reverse mortgages where the value of the property is only 120.
Yeah.
So there's a huge
There's a
difference
big
in
difference depending on where you live. Yeah.
living. Right. So there's some talk about how the higher priced properties, or higher value properties, they're going to, maybe change that. But that's all at HUD. I have no control over that.
Right.
But again, that 2% right now that's being charged currently is so important because, again, it becomes a non-recourse loan. The heirs or the borrower never have to come out of pocket if that loan is upside down.
Right. Okay. Yeah. I think that's really important for people to know. So let me ask you this. When is it a bad idea to get a reverse mortgage?
Yeah, that's another great question. So what I always advise is if you know there's going to be a life change here shortly, right, within a year, probably a bad idea to get a reverse mortgage unless it's an absolute emergency. But if you know you're going to move, because again, reverse mortgage is an owner-occupied deal,
You have to live in, it
right?
has to be your primary home. So you can travel, you can go to
Yep,
Florida 3 months of the year and live in
yep,
Boston the rest of the year, but it has to be your primary home that you have the reverse on, right?
100%.
Yeah.
Now, you can rent out a room in your house. You can rent out 2 rooms in your house. If you had a fourplex, which you can do a reverse mortgage on a fourplex, you could live in one and rent out the other 3, right? So you have ADU in the back, like the California is very,
Well,
ADUs are very
I want
popular.
to talk about this more because I'm all about multi-generational living. So let's come
Yeah,
back. Let's come back to that. But let's talk about when it's a bad idea. But then I do want to talk about like the different ways you could use this.
got it. Okay. Yeah, see, I could go down a rabbit hole. Part of that ADHD thing we were talking about earlier. But yeah, bad idea. If okay, you're going to get a divorce, might be a bad idea to get one. Although reverse mortgages are great in a divorce scenario. We can come back to that later because it
Okay.
provides options other than just,
Okay.
sell a house. Well, what if one person can stay and you can use some of that line of credit to put into the asset pool to be distributed, right, in a
Oh,
different
that's
way, different,
interesting. Well, that's
right?
very interesting. Okay, now I'm going to go down a rabbit hole because, gray divorce is a thing. Like we hear a
Yeah,
lot
so it
about
is. It's
this.
huge.
Yeah.
It's huge. Yeah, it's
And
huge.
and a lot of people end up living in the house with their estranged spouse or
Right.
ex-spouse because they can't afford or they think they can't afford to live in two different places.
Right. Exactly. So let's go back to my mom and dad.
Okay.
Um, if they were getting a divorce, right, they could, mom, maybe mom loves the property. She got a $300,000 line of credit. Dad's like, I'm out of here. I don't want to be in the house anymore. It doesn't serve my purposes any longer. They could enter that into the whole conversation with the attorneys and between themselves of, okay, you get access to that line of credit in year one, you get access to, in my mom's case, let's call it 150,000 because they limit you how much you get access to in the first year.
Hmm.
After that, it's game on. You can take it all out if you want to. But they say, okay, you get access, Millie, what's my mom's name? Millie, 150,000. We're going to, at the close of the reverse mortgage, we're going to put that into the mix. And from that, we're going to give Harvey, my dad, we're going to give him $150,000. And we're going to take the other assets, here's the retirement, and how we're going to bring all that together so it's equitable for everybody. So in a simplified example, my dad walks away with 150,000 from the equity, which didn't cost my mom no taxes. She didn't have to make a payment on it, so she gets to remain in the property with
It
still
just
another
reduces
150.
the amount that she would get later if she sold the house by that amount.
Correct.
Yeah.
That's right. That's right. Because that reverse mortgage balance starts with, the closing cost plus now that
Hmm.
150,000. But the great news is that one of the partners who's now divorced, if they want to stay in the property and the math makes sense,
Yeah.
they get to remain in the property without a mortgage payment.
That,
And then if there's enough equity, right,
yeah.
maybe that departing spouse, maybe they get to go use it as a reverse for purchase and they buy a property that they want to buy and they don't have a mortgage payment, so they both get what they
Oh,
want.
this is interesting. I have never thought
Yeah,
about this scenario before. That's
right.
fascinating. So, again, you'd both have to be over 62 to even qualify for this because you're talking about
Right.
reverse mortgages here. But so that would be an entirely separate reverse mortgage. Like the spouse who didn't stay in the home could
That's right.
get a new reverse for purchase mortgage on the purchase of a new home.
That's right.
Could they,
Right. And
okay,
so the
I don't know if this is gonna get weird, but could they use the money that they got from the other spouse in the divorce settlement that ultimately came from the reverse mortgage on the first house as the down payment on the other house? Oh my gosh. Okay, this is blowing my mind a
it
little
was
bit. I
their
know
money. It was
it was their
well, it
money.
was it
Yeah.
was the equity from the house, right?
Okay.
100%. Yeah,
Wow. Okay, Michael.
100%.
This we could go off in so many different directions here, but that's fascinating. I never thought about that. Okay. Hopefully, if you're listening to this and you're going through that difficult situation, maybe that'll be a little light at the end of the tunnel for somebody listening to this to know that there's just another option that maybe nobody thought of before.
I have one right now where they're contemplating listing the property, and the wife's a little bit more vocal about not sure if she wants to stay in the relationship. And I suggested to them this option, in which they're both looking at, right? They're both looking at it. Husband doesn't want to leave the relationship. Wife's kind of like, yeah, I don't know if I would be here anymore. They're in their
Mm.
70s. And so there's some health related issues and caretaker issues
Yeah,
and
a
who would
lot.
do, right? So, but yeah, it does become another lever to pull for the attorneys as well, right? Because what's usually the option, and you as a real estate agent, you know this, is that there's a divorce, they sell the
They
house,
sell a house, and somebody is
right?
always sad about that. Like there's
100%.
usually someone who's devastated by that.
Right,
Yeah.
right. So if we can get them qualified, right, meaning if the math makes sense, again, it's based on age, interest rate, and the value of the property, and if there's a mortgage debt or not,
Hmm.
right? And if
Yeah.
all that math makes sense and all the parties are good, then it makes a ton of sense
Yeah.
because, like you said, that individual wants to stay. They are super happy and they don't have a mortgage payment.
Right. Amazing. Okay, that's incredible. So back to my original question of when it's not a good idea. I mean, I think your basic answer to that was, if a major change is happening in like within a year, it often doesn't make sense. And I would imagine that's primarily because that mortgage insurance premium, which is the most expensive part of it, is
Right.
essentially a closing cost, and that's not going to get reduced if you sell the house in 6 months, right? Like, is that why? Because the math wouldn't make sense, right? To pay, using your mom as an example, the $14,000, that doesn't get reduced if she just happens to sell the house 6 months later.
That's right. Yeah. So the longer you amortize that expense out, the cheaper it
The more
gets.
it makes sense.
Right.
Yeah.
Yeah.
Yeah,
Just more
totally.
simply put that way. Right.
Okay.
But again, if there was an emergency, we wouldn't want to get a reverse mortgage and be out of there in 6 months. That's not what we want to
It
do.
doesn't make
Right. It's
sense.
really for people that want to stick around.
Yeah. Okay. So I have a couple more questions. So I can totally see. I want to talk about adaptations to homes, and then I want to talk about multi-generational living a little bit and how this might
Yeah.
play into that. I mean, certainly, I think one of the big reasons that people might want to tap into their equity and age in place is so that they can access funds to make the house fit better to their needs now. There are so many families out there, or older couples, or older single people living in the home they want to stay in. Maybe they can even afford to stay in it, but the shower's on the second floor, or there's just too many stairs out the front of the house.
Right.
And that is no longer fitting the stage of life they're in, or where they imagine, they might be in the next 5 to 10 years. So do you see a lot of people access reverse mortgages so that they can get the capital that they need to adapt their homes for aging in place? And I know you're an
Yeah.
aging in place specialist too, and on the board for the aging in place. What is it? It's the
National
National
Aging in
Aging in
Place
Place
Council.
Council. Yeah.
Right.
Okay.
Right. Right. Yeah, I would say that the reasons why people don't do all the renovations is because they don't have the necessary funds to do it, right?
Yeah.
So if a reverse mortgage comes into play, whether it just frees up monthly cash flow because you no longer have a mortgage payment, or because you no longer have a mortgage payment and you get a line of credit out of it, right? Again, there's no restrictions on what you do with the money, right? So when you want to access your line of credit, if in fact that you get a line of credit, they're not going to say, well, Julie, what is it you want to use the money for? No, 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 no. They've got 5 business days to get it to you, and you call and say, I want to use $5,000. Can you please distribute $5,000 to me? There's no questions asked, right? So you can use that money for virtually anything. So home renovations, like my mom, I think she's used about $25,000 or $30,000 to renovate the home because both my parents took a fall, right? Both of my parents took a fall, and that's one thing I'll just add to that is I talk to a lot of seniors that say, I'm good. I don't need a reverse mortgage. Okay. And what I'd like to say is that may be your particular circumstances today.
Hmm.
That may be the snapshot of your life today. But if you get in a car accident and you don't have auto insurance, you can't get it after the fact.
Right.
If you go to the hospital and you don't have medical insurance, you can't get it after the fact. So having a reverse mortgage, right, gives you that insurance policy, right, that you may not be able to qualify for later on. The program may change and adjust. Your home value, your risk of your home value. Right now, home values, as you know, are going down in many markets, not all, but in many
In
markets, they're
many
going
markets, they
down,
are. Yeah.
right? So that means your access to your equity also comes down
Is
because
dropping
that's a
down. Like if you had
market.
gotten a reverse mortgage 2 or 3 years ago, your access to equity might be higher in some parts of the country than it would be today.
Well, it would be huge because interest rates were also lower too,
Yeah.
right? So that's the other thing too. So there's a lot of volatility that we can't control. So if you can qualify for a reverse today, you go, I don't really need it. Well, okay, but you better, think about 5, think about 6 years from now. Will you have the cognitive ability to understand what the product is? So when you sit down with the counselor on the telephone
And
and they
that's
start
part
asking,
of the qualification too, right? You do need to be able to have the cognitive ability to go through the counseling process, right? That's a protection
that's
in
right.
place. Yeah.
That's right. That's a consumer protection, and 100% of all seniors getting a reverse mortgage and/or anybody that's on title has to go through the counseling, right? You don't have to be a borrower and be on title. So if the kids are on title, they have to go through the counseling as well. And the counseling is there. It's got to be a HUD-approved counseling, and it's there to make sure that the senior has the cognitive ability to understand what the loan product is. They want to make sure there's no elder abuse going on, right? That's one of the things about the reverse mortgage. Oh my God, my mom's got a $300,000 line of credit. How can I get her a reverse and then, warm up mom and say, hey, mom,
Really
I need a,
scary. Yeah, that's really scary.
right? Right. And then the last one is make sure that we as professionals are providing the education so that they understand what the reverse mortgage product is.
Right, right. So what if someone's parent So a lot of my listeners are like our age, Michael, right? We're in our 50s.
Yeah.
We have
Yep.
aging parents. We still have
Yep.
kids. You did a crazy thing and had another kid. So my kids are older.
I did. Yes.
My
Yep. I know if you can hear him, that you might be able to hear him. He's in the kitchen doing his thing right now. But yeah.
Michael started all over again. I'm done with that part of
Yep.
parenting.
Yep.
But so a lot of, my listeners are our age and dealing with, similar things, right? In the thick of it with the sandwich generation and helping their
Yes.
parents. If someone has a parent who has cognitive impairment and they're interested in a reverse mortgage for them, is there any way to get it, like through a power of attorney or anything like that? Or is that kind of off the table if the borrower has cognitive impairment?
It's not off the table, but the right legal protections have to be in place
Okay.
with, control and authority. But I will say though, like my mom and dad, my dad's got cognitive impairment, he's
Okay.
got dementia, maybe moving into Alzheimer's. And so, but my mom had a POA, which I didn't even know about. She had a POA. She qualifies for the reverse, right? Their income was brought together, but because she had the POA and we had a diagnosis
Yep.
for my dad that said, hey, he's got this, we were able to move forward with it
Okay.
because we had that diagnosis. So in a
Right.
couple situation, right, if there's a memory issue, then if we have a POA and we've got the right thing set up and we've got a diagnosis, then we can move forward there. So that hopefully that's good news to some of your listeners that are in that
Okay.
situation.
But maybe not if it's like a single parent with cognitive impairment and an adult
Yeah,
child who has the POA.
yeah, it gets a little wonky,
I can
right?
see that. Yeah.
Again, we have to be careful. And so I always call the owner and say, this is what I got. What do you think?
Yep.
Right? So I'm going to say, don't think of it as no, my answer.
Okay.
Let's find out what the particulars are, right? Because maybe it's a conservatorship. Maybe it's, they're a guardian.
Right.
So let me ask the underwriter about that and say, okay, this is what I have. What do you think?
Right. Okay. So that's good to know and this sort of leads me into the whole multi-generational space. So I
Right.
remember, I think when I first met you, I was talking with you about this and I thought, wow, there's so many things about this that I never thought of before until you start digging in, right? Both to multi-generational living and to reverse mortgages and just like the possibilities that people have for
Right.
financing things.
Huge.
And so I talk with a lot of families who are combining households, either with their aging parents or their young adult kids, or both in some cases. And there's so many different ways that can be done. You can build out a walkout basement apartment, or you can just like convert the big living room you never use into a first floor primary suite and add a bathroom. And then a lot of people, I think you had mentioned earlier, love the idea of like a backyard ADU, an accessory dwelling unit. And
Right.
so I had never thought of it until I had talked with you about this a few months ago. But if the person who owns the home is the person over 62, and it just goes without saying, the math has to work, right? There's a calculation that, as you said, is based on the person's age, the value of the home, and what's the third thing,
If they
Michael?
have a mortgage balance or if they don't have a mortgage balance. You don't
Okay.
have to own the home free and clear. That's another myth about the product. It's really just more about the math.
Okay, because the reverse mortgage product, if the math works, would pay off the first mortgage and then you'd just be in the reverse mortgage. Like it would
Yes,
pay
and
off the
maybe you
existing mortgage and then you wouldn't have a
pay
payment.
out things, you wouldn't have a payment, and if the mortgage payment, the math works, you may have a sizable line of credit or a small line of credit,
Right.
right? But for sure, you walk away from those payments.
And if you had a sizable line of credit, because I happen to know to build a backyard ADU here in Massachusetts can be $400,000. I mean, people are shocked by that, but it can be a lot of money because you have to think about like septic and sewer and water and electric, and there's so much to it. But if you
Right.
can access the funds for it, you could potentially use a reverse mortgage product to turn your home, to transform your existing home or buy a new home and turn that into a multi-generational living space that works for multiple generations of your family. But the caveat there is that the person who gets the reverse mortgage has to be the person who's over 62 and the numbers have to work and they have to be the person on title for the home. Is that right?
That's correct. Yeah. So the borrower is on title, although you can have your kids on title as well, but they just have to go through counseling. So yeah, there's limitless opportunities for the use of an ADU or when you get a reverse. build that ADU, and you could literally have your family live in the single family residence. And if you build the ADU outright, you could live in the ADU as the senior, and then the kids could pay you a small rental amount or whatever you dictate, right, that they pay you. And so you've
Yep.
got an additional stream of income.
Yep.
Or reverse that whole scenario. If you built an ADU and you want to age in place and you need additional health care, you could actually have a caretaker living in your ADU while you're living in the primary residence,
Yep. So you'd have somebody there to
right?
take care of you. Yeah, that's
And
very
they've got
interesting.
some privacy. Plus, you know what? What does an ADU do to the property?
Oh, it just is going to increase. Well, I think it's always increased property value,
Yeah,
but now the demand for homes that can accommodate multi-generational living is skyrocketing. Absolutely
huge.
skyrocketing. We have one come
Yep.
on the market in almost any market. It's gone because families
Yeah,
just need this solution. We have a care crisis of our aging parents, and we have an affordability crisis for our young adult kids can't afford to get into the housing market.
right.
Combining resources into a multi-generational home is
Yeah,
it's such a great solution for people.
yeah,
So
yeah.
I want to ask you about the title thing. So, okay, so say mom is 72 and she owns the home and she takes out the reverse mortgage and she builds a backyard bungalow and then she decides she's going to move into the bungalow, which is kind of
Right.
fun, right? She's like, "Ah, I'm tired of
Hmm.
taking care of this big house. I'm going to live in the little bungalow. Family, you move in here with your kids and I'll be close to the grandkids, but I still have my own space." And she does a reverse mortgage to do that. Now,
Right.
if and I talk about this a lot. There's so many different ways that families decide to manage the legalities and the finances of living together. And so, in our case, it was my mom made a financial contribution to the down payment on the house and then gave some money, per year. And then my husband and I own the house. My mother didn't want to own the house. That was her thing. She doesn't want the responsibility. That's how we worked it out. But some families
Right.
want combined ownership, want, all of the adults on the title. If
Mhm.
mom is 72 and she gets a reverse mortgage, she's on title, and then say, her daughter also, she wants her to be on title too. I understand that the daughter would also have to go through counseling, but I just want to
Correct.
clarify a couple things. So the daughter does not need to be over 62 and would not be on the reverse mortgage, so that wouldn't affect the mortgage qualification.
She is not a borrower in this example.
Okay.
Right.
Does it matter if she's already on title? Is it better to add her to title afterwards? Or like, is there a better way to do that, or it just varies?
Um, you can do it either way, but in either case, we want to, let's say, for example, I'm doing a reverse mortgage right now, true story. And the son, he is on title. And so he had to go through counseling, and there's a couple other additional forms that we need to make sure that he signs. And the way we submit it, right, it's accurate so that they know he's on title right now. He's going to attend counseling. He's got to sign the certificate, the whole thing.
Okay.
If the same example, he wasn't on title, but they want to add him afterwards, technically, you know, when you go to the title company, they'll add anybody on title you want to. They're not going to say no. However, it'd be up to the responsibility of the borrower to make sure they notify the servicer
Okay.
and to make sure that the individual was to receive counseling if they were added. Now, does that happen? I'm not there. I don't know. But
Yeah.
that's technically how it would need to be done. Is anybody added after the fact would need to go through counseling, and then we'd also need to notify the servicer that there's an additional individual on title, but yet they're not a borrower.
Okay. I feel like there's so many options here. It's good news, right? There's lots of different options for how this could potentially work.
It really is. Yeah. And that's why I'm such a huge proponent. And one of the saddest things about a reverse mortgage is that, there's 12,000 seniors today turning 62 or 65, depending on how you look at it. There are only 2% of all seniors who qualify for a reverse mortgage around the country actually tapping into it. And why? Lack of knowledge, myths versus facts, bad water cooler chit chat. It boggles my mind. I was at Starbucks about 6 months ago, and I sat down with a senior couple that I know, and it was just saying hi. And the senior couple I sat down with, and the friend's husband had just passed. And I said, wow, okay, have you ever thought about reverse to help you out a little bit? And the couple that I know, she said, oh, reverses, those are bad. And it's like, I immediately go, really? Share with me, why are they bad? And what do you know about them? And inevitably, it's stumble, stumble, stumble. It's I don't know why. You lose title to the house. It's all this stuff that's been passed down through generations and water cooler chit chat. My neighbors, uncles, friends said. And it's really sad, but again, to only be at 2% penetration when the reverse mortgage product has been around for the better part of 30 plus years,
Yeah.
um, is pretty sad because how many seniors, you and I are in the space,
Yep.
how many seniors or the parents of the sandwich generation, their parents could really benefit from A, not having a mortgage payment, B, having a line of credit, and just living a more stress-free life.
Right.
Financial stress is the number one stressor for seniors,
Yeah.
or probably anybody, but
Yeah.
especially for seniors, right?
Especially for seniors. Absolutely. And do
Especially.
you think, I mean, so I remember this too, right? You know, my background's in affordable housing. I worked for an agency who did the HUD housing
Right.
counseling that is required to get a reverse mortgage. So I've been around reverse mortgages for a long time. And I do remember years ago that they somehow did get the reputation that they were not good. And that is like a myth that has persisted for a long time. Were there improvements to the protections made over time? Like, was there a time when maybe they were abused? Like, where's that come from?
So back in the 80s, it was kind of the Wild Wild West, and there were a lot of bad actors in the 80s, and that's
Okay.
really where it all stemmed from. And we didn't have the consumer protections like we have now, like the counseling wasn't a thing back in the 80s.
Okay.
The financial assessment wasn't what it is today, right? Where we're going to make sure they can pay the property taxes, pay their
Got it.
current debts, and pay the living expenses.
Okay.
We didn't have the protections in place for the eligible non-borrowing spouse,
Okay.
right? And if you've got a younger spouse, okay, let's say you're 70, but your spouse is 56, you qualify. You've been married for 20 years, okay? We see this a lot, male or female, younger spouse.
Yep.
She's 56. Well, wait, she's not 62. How does she qualify? Well, because she's your wife, in this case, so your wife, okay? And you've been married. They are living in the property at the time you get the reverse mortgage. She could be what's called an eligible non-borrowing spouse. We have to use her age for life expectancy, okay, which will change the numbers. And if it still works with that individual's age being the younger of the two spouses.
Yep.
But let's say it all works out. They're 56, you're 70. Statistically, that 70-year-old is probably going to pass before that 56-year-old,
Right.
right? So in the event that that happens, as long as that 56-year-old spouse, male or female, was married at the time they got the reverse, is an eligible non-borrowing spouse because we use their age. They remain in the property during the marriage and after that maturity event where that senior spouse or older spouse passes or moves into a full-time care community.
Okay.
They remain in the property and they can continue to pay the taxes and the insurance. They're good. They can live in that property until 150 years
So
of age.
nothing else changes. So if all those things are in place that you just described, if
Yep.
if the older spouse dies or has to move into care, out of the home, the younger spouse who's still in the home doesn't like suddenly owe on the balance of the reverse, doesn't suddenly have to sell the home. Okay.
Yep.
And so
Yep.
this helps, I think this helps explain it a lot. So like the reality is 40 years ago, oh my God, were the 80s 40 years ago, Michael? That makes me feel really old.
Pretty much. Yeah, pretty much. I know,
That's
right?
really scary. Oh
Yep,
my
I
gosh.
know.
Okay, 40 years ago, a lot
Just
of
age
these
ourselves.
oh wow. Oh, I don't think I'm gonna get over that today. So 40 years ago, there were not all of the protections in place. So legitimately, I'm sure there were some nightmare scenarios that came out of that time. And that is what created this idea that has just persisted because people haven't been educated otherwise, that this could be like a bad, scary thing.
Right.
But a lot has changed since then.
Oh, a ton. And, even originators, even loan officers in the business that have been, top producing loan officers for 10, 15 years, a lot of them won't touch a reverse mortgage. Financial planners, because their companies in the rumor mill and the myths, they're starting to warm up though, because guess what? The baby boomers, they like their lifestyle.
Yeah.
They are not afraid of technology. They want to continue, with the golf and everything they got going on. They're healthier.
Yep.
And so reverse mortgage makes a lot of sense. So financial planners and the big companies out there are starting to change that, right? They're starting to change their perspective on that.
Because of consumer demand, I guess, right?
It's at 100%, right?
Yeah.
I mean, when you talk about dwindling entitlements, right, like Social Security and Medicare, Medicaid, that's constantly on a senior's mind. So if I have a reverse mortgage in place, okay, and I don't have a mortgage payment, and I also may have a line of credit that I can dip into, You can somewhat self-insure, meaning your premiums can be higher because you don't always go to the doctor every single day. So your copay can be higher, which brings your premiums down because you can pay that money because you've got a line of
Because you
credit.
have
Or
cash
same
flow.
thing,
Yeah.
right? So you can do the same thing with your car. And you know this, if you have a much higher copay, right? Because you have access to money, you can have a lower monthly payment. So you can somewhat self-insure, right?
Yeah.
And that's another thing too on benefits, probably something to bring up is that because it's not taxed, the line of credit, and because it's not considered as income for your Social Security and for your Medicare, which are not means tested, meaning they're not asset based, it has zero impact on your Social Security and your Medicare. If you are Medicaid, which is means tested, and or any benefit that is means tested, then we have to be careful with that reverse mortgage and that line of credit, not to exceed whatever that maximum asset allocation is for that program, right? Because if I pull money out of my account, if I call the servicer and say, hey, I'd like to get $10,000, they go, okay, they send it. Well, if your bank account can only have 3,000 in it at any given time, that's a problem,
Right.
right? Because you'll kill that program and
Yeah.
they do monitor. So when it's an asset or a means tested benefit, we have to be careful with the reverse. If it's not, Social Security, Medicare, no problems whatsoever. Matter of fact, going back to a plan, because we're talking about Social Security, if you can get a reverse mortgage at 62 and you want to delay accessing your Social Security because every year it goes up by 8%
Yeah.
and the full retirement age is 67, really you can extend that to 70, which now is 124% versus at the age of 62. But if you want to extend it, you got a reverse mortgage. Well, if my Social Security payment was $1,800 a month, my mortgage payment was $1,500, I get a reverse, I don't have the $1,500, I can delay accessing that Social Security, and possibly in that example, and
Hmm.
let that add up, because mom and dad live a long time. It's all based on longevity. And, I'd rather have a much higher payout on a monthly basis because I'm expecting to live to 90.
Right.
If I'm expecting to only live to 75 because that's been the family tree, well, then maybe getting the Social Security early is the way to
Would
go,
make sense. Right. Right. Okay.
right? That would be based on a plan of delaying accessing Social Security because you've got a reverse mortgage in place.
Yep. Okay. Woo. Okay. Every time I talk to you, I learn something new.
Right?
And I know you're kind of on a mission to educate people about this. I know you do amazing reverse mortgage seminars. We've covered in this conversation like some of what comes into that, but I know you go much more in depth about exactly how it works. There's like a lot more questions
Right.
that people have. So I'll make sure in the show notes and in my email newsletter to let people know when the next seminar is. It's free. They can come and learn more if they'd like to and see if it might be a good fit for them.
We have one next week. We
Yeah,
have
I
one
was just
next
going to
week.
say, so this is going to get published next week. So it should be out in time for people to attend. I think it's December 10th, right? At
December 10th. Yep.
2
2
p.m.
p.m. Pacific
Pacific,
Standard Time.
5 p.m. Eastern time
Yep.
on December
That's
10th.
right.
Okay, great. I'll make sure people know about it. And I will also put a link in the show notes and in my email newsletter to how you can register for that as well. If you'd
Absolutely.
like to. Yeah, because you just have to
100%.
register. It's free, but you have to register to get the Zoom link. So I meant to ask you this at the beginning, but we dove in and I was just so interested in everything we were talking about that I didn't. Why did you get into this, Michael? I would just love to hear, like on a personal level, like what drew you to this?
So I have a strong affinity and admiration, quite honestly, for seniors. And I'm a senior. I'm 58, right? But I mean, when I think of a senior,
I'm 57. I'm not a senior, Michael. Just kidding.
right? Well, technically, right?
Technically, we are. Technically, we are.
Right.
Yep.
But what really got me into this field, and it happened by accident, it wasn't a plan, but it was, my grandmother, when I was 16, my grandfather took a fall. You know, 5 point something seniors every second of every day take a fall. There's over 3 million seniors that go to the emergency room due to falls per year. Okay. And my grandfather was one of those. And I still have the very vivid image. He was painting the side of the house. He put up a rickety ladder and it was on kind of a rock bed, where they lay rock on the side of the house and pebbles. And well, he fell. And you can see, I remember the handprint as he fell. He
Oh,
broke his hip, ended up in the VA hospital in San Diego, and never made it out. Well, that summer when he did that fall, which is the beginning of it, I drove my grandmother every single day in her Lincoln LTD, gas guzzling, V8. I drove her, probably 35, 40 miles, one way and went to the VA with her. And I saw how that traumatized her. And so that's where my affinity for seniors really came into play. And I got very close to my grandmother. She was part of that generation that, she was born in 1913, so she lived through the 20s, she lived through the 30s,
yeah.
the Great Depression. saw her husband go off to World War II. Then she went through the 50s. Then she saw her son go off to Vietnam as a helicopter pilot. My dad.
Mhm.
Then she went through the. So I mean, she saw everything,
My
right?
grandmother was born in 1909, so yeah,
Right.
same
Right.
trajectory. Yeah.
They saw everything. So I really have great respect for seniors. And when I can help a senior, I do. And my my most rewarding thing to a senior with a reverse mortgage is because they really sometimes with all borrowers of any kind of loan, they don't realize what they're getting into until it actually sinks in. And when you've got a mortgage payment as a senior for 25 years, and now you are single or you're living on Social Security of maybe $1,800 a month and your mortgage payment is 900. You're struggling,
Yeah,
right? You're making a lot of choices.
absolutely.
So when I can help somebody like that, and at the very end of it, at the signing, I can say, congratulations, you're mortgage free for the rest of your life.
Yeah.
When that sets in and that senior's life goes bing, and you just got $900 back tax free in your pocket, which doesn't even register. I've had to literally write down what the mortgage payment is 12 times to say, see this number? This is what you don't have to spend anymore. And they go, oh, because they don't think about it as getting money back. It's just, no, this is what you're not putting out every single month.
Right, right.
Right?
And to reduce some of those really like hard choices that they've probably had to have been making with limited income.
What they eat, when they drive, when they turn on their heating, their cooling,
Oh God,
um,
that's heartbreaking. Yeah.
when they travel, right? So if you're on a fixed income
Yeah.
of $1,800 a month and you get $900 back,
That's life-changing.
and you don't have a mortgage payment, it is life changing.
Yeah.
It's absolutely life changing. And so those are my favorite reverse mortgages. We also do what's called proprietary reverse mortgages, and those are for in not all states, some states 55 and above, and then there's some other states that say, well, you got to be 60 or 62. But those are more for jumbo, right? Jumbo
So higher
reverse
value
mortgages,
properties.
higher value properties, bigger loan amounts, right? And so those are very strategic for many of those seniors. And again, there's no age limitation. Matter of fact, the older you get, the better you get. That's one thing. For all you ladies that think you want to be 39 forever, the older you get with a reverse mortgage, the better
Actually,
the
it's
quality.
better to be older with a reverse. Yeah. Yeah.
That's right. That's right. Yeah. So again, my grandma, she was the catalyst for my affinity for seniors and why I do what I do.
Amazing. What was her name?
Her name was Henrietta, and we called
Henrietta.
her
Wait, and
yeah,
you called her what?
Doll. Her nickname was Doll.
Doll? Oh, that's awesome. That's funny. My grandmother's nickname was Sis.
Okay. Yeah.
She was one of
Yeah. And
14. She was a sister to many.
you know what? My grandmother, I think there were 7 or 8 kids, and my grandmother, they grew up Michigan. And so she was a Rosie, literally was a Rosie the Riveter,
She was?
right?
Oh,
She
amazing.
was. And she would tell me story after story about, all the struggles that they had during the war and how they would literally, get ready to go out in the factory that night. They go in the bathroom, they do what they needed to do, but yeah, she was a very strong woman. I'll never forget. Yeah, I'll tell this quick story, but I'll never forget. She had a roof worked on, and she got the first check right to get them out there to do the work, and then she was going to cut the second check when they got done. Well, I show up and she was mad, right? She was pretty fiery too. And I said, Mary, what's going on? And she goes, oh, gosh darn it. And she used some different language, by the way. Those gosh darn roofers, they didn't do what they were supposed to do. I'm not cutting them a second check. They can go to hell.
I think your grandmother and mine might have been cut from the same cloth. Okay.
100%. So, I really admired her, and she was fantastic. She was very classic bombshell, 50s kind of pinup, a figure, the whole thing. And she loved Clark Gable. She said, you know what, that man can put his boots under my bed any day he
Oh
wants.
my God. Oh, she was a wild one. I love your grandmother.
She was great. Yeah, she was
That's
great.
awesome.
That's why I met.
That's why you got into it. That's why I can tell you're so passionate about it. And that's what attracted me to working with you. So I'll share more about this in the show intro and the outro and the show notes, but just the short story is Michael and I can work together to help people with reverse mortgages in all 50 states. And one of the reasons that I connected with him is because he is a certified senior advisor like I am. And I have a great, respect for that certification because it's really well respected in the industry. And it does mean that we've spent a lot of time learning about and practicing, what are the issues that older adults face, and how we can help in many, many different ways. And my audience knows that I help people in many facets of their home situations. And what I realized was that a lot of my clients or their parents want to stay in their homes, age in place, or figure out like how to create these multi-gen homes together. And a reverse mortgage product is one possible way to help make the things that you're trying to create for your family possible. So I'll put contact information. Anybody can reach out to me. If you do reach out to me and you're interested in a reverse mortgage, I partner with Michael. So you'd be partnering with both of us to explore the possibilities for yourself. So, and Michael's teaching me every time I talk to you. I learn something new because you're a wealth of information about this. So I so appreciate your being here and having this conversation.
Yeah. You're welcome. Thank you for allowing me the opportunity. Education with this product is absolutely key. And so your listeners, if they listen to the whole podcast, hopefully they do, they know probably 90% more than the rest of the population out there.
Great. Wonderful. Well, thank you again.
You're welcome. You're welcome, Heather.
Wow, I told you this was going to be a fascinating episode. I hope you got as much out of it as I did. I love how Michael brings both the expertise and the humanity to this work, whether he's helping someone free up cash flow so they can stay in their home, fund aging in place renovations, buy their next home, or create a safer and more sustainable multi-gen living setup. The stories and the information he shared, the real outcomes for real families, are such a powerful reminder that our home equity is more than just a number. It really can be leverage. It can be freedom. It can be our second chance at the life we want to keep living. If you'd like to learn more, Michael hosts regular free educational seminars, and he makes it incredibly easy to understand your options. So I'll link to the next seminar in the show notes, along with my contact information, because Michael and I partner together. So when you reach out to me at juliford.com/reverse, you get the benefit of working with both of us to help you decide if a reverse mortgage is the best fit for your needs. And if this episode made you think differently about what's possible in your next chapter, especially if you're supporting aging parents or you're planning for your own aging journey, I hope you'll hit follow, leave a review, or share this with a friend or a loved one who needs it. This is what Home After 50 is all about, making empowered choices that support connection, freedom, and a beautiful life at every age. Thanks for listening. I'll see you next time. Thanks so much for listening to Home After 50. If this episode resonated, I'd love it if you'd come hang out with me on Instagram. I am at It's Juli Ford, ITSJULIFORD. Just remember, no E on Juli. That's where I share ideas and behind the scenes about multi-generational living, real estate, business, and creating a next chapter that you love. And if you're curious about whether multi-generational living might be right for you, you can grab my free guide. It's in the link right in my Instagram bio. It's a simple way to get started imagining what's next. Because after 50, home isn't just a place, it's who we're becoming. See you next time.